We're a recently formed silver company. I'm going to make some forward-looking statements here. Please take a look at that and understand it. We have a portfolio of 3 past-producing silver mines. One in Coeur d'Alene District in Idaho, the Silver Strand mine, only ever produced down to 90 meters in the same rock formation as multiple 100 million ounce producers. 2, we have Eliza. It's in the historic Hamilton District. It's next to Treasure Hill off the south side of the Eberhard Fault. Grades on the property have come up to 18,700 grams per ton. And we're looking to explore and put that together. 3, we have our Silverton asset, which is in the Silverton District of Nevada as well. Past producing mine, 933 grams a ton out of it. No modern exploration on either Eliza or Silverton has been completed. We have a strong team in the background here and we'll touch on all 3 of these and the team going forward. I do want to mention that we use something called the triple-pronged approach, not only in our assets, but in the way we look at our company. Potential large exploration payoff, near-term production potential, and meaningful acquisitions. Just wanted to pop up the Lassonde curve to show you the potential valuation and where we sit on there. We'll zoom it in. We have 3 assets that sit on the very bottom of this curve. So like Chen was saying, you know, a potential American Pacific or any of these other very successful companies, we have that potential ability with 3 potential top tier assets. Want to go over our capital structure very quick. 37.4 million shares outstanding, 2.7 million options, and 7.8 million warrants. This gives us a very tightly held structure. Lots of room to grow, just like our assets. Well, let's touch on our first asset, the Silver Strand and Burnt Cabin mine. Silver Strand, like I said, 90 meters past producing. That's the depth of the mine. There's a land package that we're able to consolidate, 5.5 kilometers that has not been completed before. So it gives us access to the entire strike length all the way up to Burnt Cabin. We've seen a lot of mineralization on surface, very positive for subparalleling veins, and we're exploring that every day with the surface geo program and drilling soon. We just want to say that we're in the Revit formation. So that's the same formation of Sunshine Mine, Lucky Friday, which is still producing, and the Galena mine. All have produced more than 100 million ounces of silver in their mine lives. Our phase 1 exploration program, that's kicking off here this month. We decided to go back into the underground. We rehabilitated it, became 2 weeks ahead of schedule on the rehabilitation. We're looking at mobilizing a drill into the underground and doing some surface drilling as well. So that's kicking off right away. We've had some very strong grades from the underground, 2,744 grams per ton silver, 9 grams a ton gold. So we do have something that's called a gold credit. So as we transition into production over near term, we would look at using that gold credit to boost up our silver production. It's pretty exciting from that standpoint. We've had surface samples, 255 grams a ton silver, just under 12 grams a ton gold. So that gold credit carries on all the way up to the Burnt Cabin mine. Cue the video. We're going to play a nice video on our Eliza and Hamilton area.
The Hamilton silver discovery in the late 1800s is the most prolific silver discovery ever in the United States of America. It sparked one of the greatest silver rushes of its time, with over 10,000 people making their way to Hamilton, Nevada. It is the reason Nevada is called the Silver State. The silver grades were spectacular. Production grades ranged over 2,500 grams per ton silver. Up to 40 million ounces of silver ore was mined from an area less than 1 mile long and a half-mile wide. Once mining ceased, the people left, and no true modern-day exploration has been done since. But what if half of Hamilton's high-grade silver ore remains.
So we're looking at the Hamilton Silver District up on that mountain there, just down to the right of the tall peak, is where the majority of that $70 million of silver came from in the late 1800s. So that's the North Block. That's where all the production came from. You can see that it's a lot higher. It's got limestone sticking out, so that's the Devonian Nevada limestone. And you can see here, this is where I'm staking. This block to the south is notably lower. And you can see right about here, this is the Eberhard Fault. So there's a large east-west fault, and on the south side, this is dropped down. The north side, it's up there. So we've got Devonian limestone on top. We got a little bit of Mississippian shale that's just on top of this. Over here is mapped as almost entirely Mississippian shale, which means that those Devonian rocks that are up there that produced all the silver are just a little deeper down here. In fact, it looks like they're actually peeking through this Mississippian stuff right over here in a few places. So this is the Eberhard Fault. They stopped mining basically at the Eberhard Fault, although there are a couple of sizable mines that we'll see in a little bit here that are just on the south side and seem to suggest that the mineralization continues south of the Eberhard, which would mean that this block could be the missing piece of the Hamilton Silver District. We're at what I would consider to be the centerpiece of the argument for there being mineralization on the south side of the Eberhard Fault. In fact, it's almost indisputable from the records from this place, which is the California mine. Now, the Eberhard Fault is just over this hill. You can see Treasure Hill in the background there. So we're on the south side of the Eberhard Fault, the south side of that big fault, just on the south side, so at the north end of the south block. Now, this mine, the California mine, it dates back to at least 1870, because in that time, a government official wrote a report and said the California mine is the most noted mine south of the Eberhard Fault. That's a quote, south of the Eberhard Fault. So there is mineralization here. The mine was sold in the late 1800s for $1 million. So $1 million in the late 1800s was a lot of money. You can see this is the old shaft, extensive workings. The old record said the mineralization here was quite uniform in grade and thickness. There's another working here. This is the main one though. Now, a couple of important points about this main shaft. One, the grade was reportedly ranged from 5,600 grams per ton silver up to 18,700 grams per ton silver.
Thank you for that. So that outlines our Eliza Silver project with the past producing California mine. 5,600 grams to 18,700 grams per ton. Most mines nowadays are built on 150 to 200 grams per ton. So high grade, large potential exploration payoff there. We transition over into the location. Eliza is easily accessible outside of Eureka. I've been there myself last week, walked the ground, easy access, great jurisdiction to work in, historic mining jurisdiction, and really looking forward to getting some geochem work going and exploration work going there. So we transition down to our Silverton silver mine, past producing silver mine, up to 30 ounces or 933 grams a ton silver, untested ore grade across surface. This is down near Tonopah, and it has active mine, it used to have active mine work. As you can see in this picture, this is one of the old mine shafts. I took this picture myself. It goes down fairly deep. Nothing has been done there since 1930s. Nothing. There's a lot of geochem work around the area. A key thing to keep in mind about Silverton is one half of Silverton is hosted in the unwelded tuff, similar formation or the exact same formation as Round Mountain. So we think there's a large gold deposit as well on this property in the same rock formation as Round Mountain. So as we see with this slide, the rock formation, Round Mountain, unwelded tuffs. So I want to go towards what we're looking at as a company. 3 high-grade silver assets. East Nevada asset, Idaho two assets in Nevada, 1 in Idaho. All prolific silver jurisdictions, all past producing mines with possible near-term production potential. So the blue sky on those mines is quite extensive for us. I want to give a bit of background on myself. I might come from the mine building background. I've spent time with Freeport McMoran in Indonesia. I spent time in the Oyu Tolgoi complex in Mongolia. Spent time rehabbing and bringing a mine pact into production in Ghana and West Africa, and recently with Sabina Gold and Silver up at their marine laydown facility. We have Lawrence Ralston, chairman of Metallo Royalties, started West Bay Capital Advisors. He had Resource Opportunities, one of the most prolific news writers on the planet in that side of it, and an excellent geologist. We're very happy to have him on board. Phil Mulholland is our chief geologist. He has a background with people like Kinross, Barrick, Western US focus, really knows this rock formation in this area well, and a definite asset to our team. We have Alnesh Milan, our CFO, does an excellent job for us. We have Jonas Lang on our boards, been a part of raising raised over $50 million in capital. He's the executive VP for Maple Gold Mines and provides a tremendous asset in the background on our capital markets side. This is our Lacey project. We are in very early stages of that and should have some results coming out in short order. I want to remind viewers that having this triple-pronged approach of having 3 past producing mines, having the large exploration payoff potential, and having the ability to turn them into producing mines in the near term will really give you that payoff if you look at the Lassonde curve and where we are sitting.